I'm Foreman, and today I'm going to be talking about Trading 212, the UK's #1 investment app, by telling you how I got suspended by Trading 212, my thoughts on the platform, and whether it's really safe for investors as of this video. Before I start, I do not want to encourage any hate towards Trading 212, and despite my suspension, I would like to try and remain as unbiased as possible. I'm also aware that you recently would have seen the short squeeze that Wall Street Bets had caused on various different US companies like GameStop, in which a Redditor had noticed that GameStop was illegally being shorted to the ground, as they were using loopholes, or a hedge fund was using loopholes in order to have a much more short percentage. This had meant that loads of retail investors had bought into GameStop, pushing the price up. Shorts had to sell out, losing money, and had to buy back in at a higher price, pushing the price up even higher. The point is behind this is that many brokers had restricted trading. They had said, no, to mitigate risk, you are no longer allowed to buy this stock, which doesn't sound too good, does it? It sounds like there's some form of high-level corruption or conspiracy, but if it's public knowledge, it's not really a conspiracy. And I completely understand the frustration if a broker or stockbroker inhibits your trading in any way, because you need that control over your investments. Even if you're a long-term investor, being told you aren't allowed to sell this stock right now is a bit of a bad situation to be in, because who knows what might happen to that stock in that next period of time. Although I feel Trading 212 personally had little to no control over the most recent event. This is because they were likely under heavy regulation to mitigate risk. Loads of retail investors were jumping in, buying GameStop, and currently right now it's down 70% from all-time highs, and that's really concerning. So what they had naturally done is prevented people from buying so that they weren't available to this risk. And this would make sense, as their CFD part of the platform, or contracts for difference, had been heavily regulated. This means that you cannot go below into negative equity balances, and that your leverage is much tightened on, so there's like less risk involved. So it makes sense as a stockbroker to mitigate that risk. Furthermore, and I am speculating here, perhaps the market makers in the US had restricted trading, and this meant it was completely out of Trading 212's control. One thing is that their assets, or their stocks and shares, are held in custody by Interactive Brokers. So perhaps if Interactive Brokers does not work correctly, or is also blocking trading, then perhaps Trading 212 is also blocked on that front. I just wanted to bring this bit up because a lot of negativity has come up around Trading 212 in the most recent times, especially with the short squeeze, and I feel that it's not just their fault, and many people had asked me about it. Anyway, recently Trading 212 had reached out to me via email, and they had stated that they were emailing to ensure fair and transparent use of their Refer a Friend scheme, the same marketing program that they had recently stopped for new accounts, meaning that new users that sign up can no longer refer their friends for free shares. But they didn't announce this, instead they just sneakily changed the terms and conditions. I should disclaim that I frequently recommended Trading 212 on the channel, and it was on a video basis. I would often recommend Trading 212 for either their fee-free trading, or I would suggest that you could get a free share. And using referral links, I was able to boost my income from content creation by nearly 2 times. This is because it made up nearly 50% of my monthly revenue, and it was really quite pivotal in creating content. And over the last 6 months, I made just over 4 digits, or around £1,100. Anyway, they had stated that after a review, my referrals were not sustainable, and that I had personally abused their system. This is because users were signing up with my referral link, they were going on the platform, they were getting their free share, and then they just weren't using the platform, they were getting the free share, probably withdrawing it, which I don't really know how I'm at fault for that really, because it's a bit out of my control, and surely if users are leaving the platform after a referral, it's not through fault of my recommendation, but rather through fault of an application or their platform that's clearly not keeping users enticed. Trading 212 had also gone to the additional length of stating that they could take back my proceeds, or the money that I had made through free share referrals, which sounds a bit like a threat. I had actually gone to the length of responding, and it had taken me well over an hour. I had been suggesting possible solutions, like adapting my marketing strategy, because When I did refer people to the platform, it was value orientated. This had meant that when I would like people to use my referral link, I was saying you could get a free share when you deposit money, which obviously users would be going on seeking value. Whereas if I'd have changed that to perhaps for people saying that I personally recommended Trading 212, and if you'd like to sign up to it, use the link description down below, then I feel that may have given them more value on the people that sign up and less people would be abusing the system. So I'd suggested about that. I'd also suggested that perhaps they could change the way they offer value through their refer a friend scheme, up the price from £1 to get a free share, reduce the value of the free share because most of my free shares were above £8 and I frequently got those above £50 each. So I'd made these suggestions and I probably wasted my time. And I will show this all on the screen right now. But regardless, it seems like my time was not well spent because they clearly didn't read my email and spent about 2 minutes copy and pasting the original email to then explain to me in detail about how they make their decision making about sustainable value, despite me specifically mentioning that I can change my value or change my referrals to be more sustainable value and therefore offer a healthier relationship in the future in terms of referrals, which would actually benefit them, but they seem to have dismissed it and not read it. This had led to me being permanently suspended from making free share referrals. This means that whilst I had a link, people may be able to get free shares when signing up, but I'm not 100% sure. I know for a fact that I no longer receive any free shares for referrals, which I think that's fine, except my older videos that are still recommending it and obviously getting people to sign up are still going to be earning value. So it's a bit unfair that they could just say, you know what, we're just going to cut this off and that's that. But life is unfair and I'll just deal with that. That's not my concern. My concern is that as a stockbroker, they have to cut costs, yet the pandemic has been a very pivotal moment for the stock markets. These brokers have seen massive influxes of new users, and so it seems a bit weird that they're cutting costs, especially because they likely are making more money in this time. For example, Plus 500, which is a spread betting company, I think they offer CFDs as well, they had seen massive increases in revenue, and so it would make sense for Trading 212, who also does CFDs, to gain benefits in revenue. And therefore cutting costs would be a bit of a weird precaution to make. Yet Trading 212 are actively contacting me and are concerned because I made just over £1,000 in referrals. By the way, as a content creator, you can literally apply for an unlimited referral link. So it's not like they weren't aware of the kind of value that content creators could get from it, as it is a marketing campaign. And so I would deem that money as an investment from the company into new users. And yet there are channels that are way bigger than mine, referring so much more people that likely still have an active referral link. One concern I have is that if Trading 212 does see this video and they decide to actually take up on their threat, because in the terms and conditions, it would make them perfectly viable or eligible to just seize that money. If they do take that money away, then I would be very concerned, and it's very likely I will update you all on that if it happens, but hopefully it won't happen. And they have said in the email, which I have put on the screen, and I will put a link for the email in the description down below, but they have said that they are not planning on taking that. And that's due to the value I had added by the users I had referred, but obviously they had mentioned that it wasn't sustainable value. But another concern is that if I sent them an email and I put lots of time into it and they didn't really read my email, how can we as customers expect them to give a good quality customer service if they've clearly dismissed the majority of my email and copied and pasted the original one? And that means I'm not exactly filled with confidence that if I had an issue with the app that might have left me unable to sell things, how could I know for a fact or be confident in the platform to respond to me and resolve my issue? The biggest concern I have is that if the UK's #1 investment platform is actively threatening to take £1,000 away from me, how can we trust this big stockbroker with our money and investments? After all, if they're threatening to take just £1,000, yet how can I put more money than that into their app if they're just going to take it away? That is a serious level of trust that I really would not want to even attempt. Surely their brand image is worth a lot more than some free share referrals that I had made, as it was a marketing campaign to invest in new users. And I completely understand cutting costs as a business. After all, if you are profitable, you want to increase your profit margins as much as possible so that you can use a majority of the earnings to either reinvest back into the business and grow further, or reward investors with dividends. Trading 212 doesn't have dividends, so I'm guessing they would want to reinvest it back into the business and grow further and be a market leader. But they are an unprofitable business, so cutting costs makes a lot of sense. And I've spoken about this in the past, about Trading 212 and possible bankruptcies. I'm going to leave a card at the top right of the video for you for later. But my concern is, why aren't they just going to be honest about it? Say, look, we're cutting costs, we've decided to cancel your link, it's just not giving us enough value, rather than saying, I've abused their system and that I'm at fault and therefore threaten to take away some money that I'd earned through referrals. In terms of safety with Trading 212, they are Fscs protected, meaning that cash up to £85,000 is protected under that. And that is actually with Barclays. Barclays means that if you have excess amounts of cash and you have money in your Barclays bank account and also in your Trading 212 account, if this exceeds £85,000 and they both go insolvent on the very unlikely chance, your money would be at risk. So please be aware of this and diversify your money into other banking. Furthermore, your investments aren't actually held with Trading 212, instead they're held with Interactive Brokers and it's in their custody. So in the event that Trading 212 goes bankrupt, you will likely just have to reach out to Interactive Brokers and claim back your investments, which isn't going to be an ideal situation. It may take a few months, but at least you know that your investments are safe. Whilst you may be financially safe though, this company is headquartered in Bulgaria, and this may be a personal bias I have, and forgive me if I'm wrong, but I'm pretty sure Bulgaria is known for high levels of corruption, which raises some serious personal red flags. And sure, our money may be protected and UK regulations may be very tight, so this can mitigate risk. But how do we know they're not exploiting some loopholes to therefore store and sell our own personal data? That's something I really can't trust, especially if they are so concerned about £1,000. Although I would admit this last bit is completely speculation on my behalf, and I've had no reason to believe this, but it is a concern that I have in the back of my mind due to their place of origin, and I apologise once more if that is a form of bias. I believe it's worth questioning whether fee-free investment platforms are truly free, or if there's a cost that we are unaware of. After all, if they're able to offer this service for such a good value, where else are they making their money or value? Obviously, they have the CFD platform, which is likely making a majority of their money, and I've discussed this in the past. But what happens when CFDs get heavily regulated? And if the investment platform isn't making money, which it hadn't been in the past, then we would either have to pay fees to use the investment platform, or they're going to find value in other means, which could be lending out your data to hedge funds, like I believe I have heard with Robinhood. Once more, speculation on my behalf. Therefore, I'm personally going to move away from Trading 212. I had a general investment account, but I don't have confidence in the business anymore, and it saddens me to say, because I do believe they had a good app and a good service, but after what I've received, I am going to move. And this is fine because I already have a stocks and shares ISA with Freetrade, and I'm happy to pay a subscription fee to support the business, because at least I know that by paying Freetrade that they have an income stream and they're more likely to survive in the future. Furthermore, this money wasn't that much, and whilst yes, it would make up around 5% of my total ISA portfolio, at the end of the day, I'm not too concerned about it, because I'd never really considered this to be cash, because I'd always just left it invested in a stock. And ultimately, the Trading 212 app isn't a bad choice for new investors. Fee-free trading is certainly an advantage compared to the traditional brokers that charge per trade. But then again, you might want to weigh that up against Trading 212 being down consistently over the last few months, and you only really have to look at Trustpilot reviews to really see what's happened. But I'm truly concerned with my security. Maybe that's a bias, but also my customer service that I have received really hasn't been up to par. And honestly, if a business hasn't got good customer service, I have absolutely no reason to stay loyal to a stockbroker in an area where we have perfect competition, which means all the brokers barely differentiate. At the very least though, our investments are protected. Our cash is protected up to £85,000. So at least you are financially safe other than investment risk with Trading 212. And that means that there's less financial risk if Trading 212 do go bankrupt, because as I said, they are currently unprofitable. I'd love to hear your opinions on Trading 212 and which broker you use and why. This is because I'd love to learn more about new brokers, as I said, I'm going to be moving away from Trading 212. And if you're interested in my financial analysis of Trading 212, or called Is Trading 212 Going Bankrupt, then click the card at the top right of the video. Thank you for watching. Have a great day.